traders, I'm James, one of the content team leaders here at A1 Trading, and as we start today's stream, I wanted to let you know about one of our show's main sponsors, FX2 Funding. With all the craziness going on in the prop firm space, we're excited to share some of the solutions FX2 Funding has put together for their traders. First, FX2 is rolling out EDGEFINDER, which is a web-based trading platform that provides traders a smooth trading experience. It also looks super cool too, but that's not all. By signing up with FX2, you get access to C-Trade. C-Trade is a trading terminal where you create custom indicators or download ones from the community. Get access to all of this and more by signing up for FX2. So for traders looking to get funded, you get 15% off by using promo code A1Trading15. That's A1Trading15. The link and promo code can also be found in the description. Now, on to the show.
All right. Good morning, everybody. Welcome back to another live stream. We are back for another week of high impact trading. We've got some news coming in here very soon, actually. We're looking down the barrel of the Empire State Manufacturing Index, and we'll take a look at this really quick just to refresher on what this actually is. It's a leading indicator of economic health. Businesses react quickly to market conditions, and changes in their sentiment can be an early signal of future economic activity, such as spending, hiring, and investment. And this is, again, coming out in just about 10 minutes or so to go. It's good to have everybody here back. We are, again, can you guys know good audio? Does the audio sound okay? Please let me know. Does the audio sound okay this morning? If it's bad, let me know. But I think I'm just checking my mic to make sure. Yeah, it should be on the good mic. Let me know if, oh, sorry, one sec. I think that's my bad. Sounds fine now. Sorry about that in the beginning. I had to start the show by myself this morning, so I was supposed to mute my audio. I apologize for that, guys. Sorry about that. We can do our intro music, though. I know I can do that right. All right. So, yes, we have Empire State Manufacturing, the index numbers coming out here this morning. The forecast is for minus 12.5. Previously, we saw minus 15.6. So we're expecting more contraction here today. And that's going to have some impact on the charts because what this is showing you is, of course, a manufacturing index would show you what kind of people in executive positions in the manufacturing world, what are they planning to do next? Are they looking to expand? You know, I love these sorts of indicators so much, like the consumer sentiment indicator. I love the producer price index, wrong one, PMIs, right? The purchasing managers index. I love those sorts of indicators because they are very forward looking. Because, you know, when you ask a bunch of people, like, let's say all of us here are like managers at some sort of manufacturing company, right? If we all are, you know, so many people are involved in the purchasing by itself for like a factory. Let's say we all worked at a factory right now. And within this factory, someone in the audience, let's say Chris in the audience, is in charge of purchasing, or in charge of like the power, like coal power plant. Let's say like he's in charge of getting coal to the power plant, and someone else in the places in charge of like the electricity, supply or something like that. Like the point is, if all of us had a role in this factory and we were all surveyed as to how we felt going forward about like our business activity, are things speeding up or slowing down? If we could give you that information in the form of a survey, that could be pretty valuable forward-looking information. They always say that you should invest in what you know. Like if you're somebody who is really big into restaurants, like if you're in the restaurant world, the old Wall Street expression is invest in what you know, because you might actually be able to gain an edge if you really know the restaurant world. By knowing it that intricately, you might actually be able to pick better companies than others. Not just by the numbers, but by, on the boots on the ground kind of perspective. So same kind of thing with these indicators like the Empire State Manufacturing Index. Of course, it is all based on New York State, which is one of the biggest, money suppliers to the entire United States. So, yeah. So we've got that number coming out in just a little bit here. We'll see how it impacts charts like gold, like the indices this morning. Take a look at the dollar as well. And we've got yields creeping higher here in the pre-market. Pre-market as in pre-US stock market opening up. Yields are on the rise here a little bit this morning. You've got the dollar index probably popping up just a little bit here. Yeah, I mean, look at this dollar, guys. The dollar index, despite the odds, against the odds, actually broke out of this level of resistance last week. And from a price action standpoint, you got to respect that. That's a pretty big reversal that happened midweek last week. And not only did it reverse, but it actually broke through decisively. Well, it did break out decisively, but you see there's a long wick on the top. I don't love that, but that could just be an indicator that we may see this and then a continued push on the dollar. Right now, from a price action perspective, it's hard to deny the dollar looks pretty dang strong. But again, we will have to see with these economic figures we're going to get this morning, that could sway things one way or the other. The VIX is also up slightly here, 3% this morning. Silver just kind of moderately pulling back. I still like this setup a lot for silver to the upside. I think that this chart looks so good. It's consolidating here near this low. I think that that's a positive here for a potential reversal to the upside. I really like the gold and silver setup right now. Unless, and I'll talk on gold for a moment, I still have my long position on gold from last week. And I've got my stop loss below here. I have not moved it. If we break through the lows, it's time for me to cut the trade and say goodbye. But if we're able to, kind of round out and continue to bottom out around this 2,300 level, I'm going to hang on to it. So I have a pretty, gold's got to make a decision here pretty soon, one way or the other for me, because I am willing to hold gold through this consolidation period because I think gold has more upside in the coming, months. If I'm right about that, then great, I will manage the trade, but I could be wrong. When you watch my videos or my live streams, please understand I don't have a crystal ball here, right? So when I'm making a decision about whether I think something is going up or down, it's not a line in the sand. I'm going to risk my entire life on whether or not I'm right or wrong, right? I'm risking appropriately, and I'm saying, okay, look, if gold can find support here and continue to hold support, it seems to be giving it a good shot right now. But if it can't hold here, if it fails to do so at the end of the day, I need to cut my trade and just move out of the way, because gold from there, if we break these levels, gold could very quickly make a move back down to like 2,200. What would get it to do that? Probably rate cuts getting pushed out until 2025. That'd be my opinion. If you're going to see gold get back down to 2,200 right now, probably the fundamental catalyst would be rate cuts getting pushed out to 2025. I don't actually think that that's going to happen. I think we are going to see rate cuts this year. I think we're probably going to see one, maybe two rate cuts this year. I think rates are going to come down. Economic data is starting to show some signs of cooling down. We've talked about this a lot recently, but let's refresh that. Look at job openings, right? I've been pointing out this chart a lot. Job openings are coming down lower. We did have a hot NFP print on the last one, but Jerome Powell in his press conference mentioned that he thinks that those, might be a little overstated. I'm paraphrasing, but he mentioned that this number might have been a little overstated, that it might have come in a little out of kind of an outlier position. So what he thinks is, labor data seems to be cooling across the board. Unemployment claims are rising, job openings falling, right? Unemployment rate trickling higher, wage growth, kind of still in the fours, but on the lower end of the fours, not quite the 4.8 that we saw in terms of average hourly earnings year over year. So wage growth, right? So I'm keeping an eye on all this data, but it is important to me that we continue to see cooling economic data in order for me to continue to stay bullish on gold. If something changes, if we get retail sales this week that's super hot, and we get PMIs that start coming in strong, and we get, indicators here that tell me that the economy is not slowing, then I need to close out of my gold position, because my thesis for gold longs is about 10% price action and 90% fundamentals. So it's got to stay the course. We've got to continue to see labor data coming in cool. We've got to see the economy showing some signs of slowing down, for me to stay long gold, because those are the recipes for a rate cut and a potential slowdown in the economy. So both of those scenarios I like for gold longs. That is why I'm staying bullish gold for now. Like I said, if it breaks the lows, my idea, wrong, and I'm out. So yeah, we don't trade news like this, Mohammed. Euro USD, Empire State Manufacturing Index, sell or buy. Nobody knows here in the chat what's going to happen with the euro based on the Empire State Manufacturing Index, because we don't have the data. I can tell you that if you're looking at the euro will move probably if the dollar is real strong, meaning this Empire State Manufacturing Index comes out better than expected. The euro dollar is probably going to move lower on a stronger dollar, but we don't know whether that comes out stronger or weaker. So it could be the opposite. Economic data shows more weakness from the Empire State Manufacturing. If that happens, then the euro dollar is going to move higher. We don't know before the news what's going to happen. And I don't pretend to know that or have some sort of secret weapon that I want to sell you guys on a huge course. Like, I don't know what the economic data is going to come out, but reacting to it is very powerful. So don't go anywhere after this spike. A lot of times people will come for the spike and they'll leave right after. Please don't do that, because I'm telling you, more value on these streams happens after the news comes out than before it, because we're not here gambling on what the spike is going to do. If there is going to be a spike, there might not be. If the data comes out exactly or very close to anticipated, the markets won't move that much. It's all about surprise when you're trying to understand the fundamentals. And you understand it's about how much does the data surprise, not just what is the data, right? Because the market thinks it's going to come in around this. We'll see if the market's right. We got a minute and a half to go here, guys. So stay tuned with me here. We're going to switch over to the all markets view, just so we can get a look at everything on one screen. So just a little bit of context. You've got the S&P 500 here. I've got the NASDAQ here, the Dow, the dollar, the pound, the euro, gold, and oil. So whether you trade currencies or indices or gold or whatever, I've got a lot of different charts up here for you, just so you can keep an eye on how the whole market's responding to this data. We're coming in about 1 minute to go. If you're enjoying the stream, do me a big favor, hit that thumbs up button, hit the subscribe button, all that good stuff. I really appreciate just the support on the channel. And yeah, so should be good. Again, don't go anywhere after the spike. A lot of people will leave, but I'm telling you, the real action comes after the spike, because that's when you get setups. That's when you actually can make decisions off of charts. So yeah, we will see. Pound and euro moving slightly higher ahead of the event. We've got 20 seconds to go. Let's see what happens here, and then we'll break down the data, see what it says. I can't do breaking news today. I'm running without an editor in the booth right now. So no breaking news. Pretend there's a breaking news. And we've got 5 seconds to go here. All right, let's see. Empire State Manufacturing Index should be out. Pending. Let's see. Again, waiting for the data to hit. All right, and actually came in better than anticipated. The minus 12.5 that we were expecting actually came in at -6. You can see a mild reaction here to the data, nothing crazy. Gold is still just sitting around where it was pre-news, and the S&P 500, same thing. NASDAQ, same thing. Euro, not making a huge move. So not a huge amount of volatility this morning off of this event so far, though it could, let's break down what this told us. So again, the Empire State Manufacturing Index was expected to show some contraction. We did see contraction. This is a negative number, but it was lesser so than what was forecasted by a pretty good margin. Not a massive margin, but worth mentioning. So what this shows us is, again, the manufacturing index came in better than anticipated. So just slightly better than expected economic print here this morning, which may offer a little bit of strength to the dollar, but clearly it's not really moving the markets that much this morning. Remember that what gets the markets to move substantially is an incredible, difference from expectation. That being said, we've got the Dow Jones here trading lower. The Dow has been really weak this last few weeks, really. S&P 500 trading flat on the day. NASDAQ, same thing. So not too much volatility. Oil is moving higher here pre-market, which is interesting. And let's switch back over to our individual charts here for a second. Also, I wanted to mention about this week, we have some really big stuff coming. This week, one of the really important variables to me actually happens tomorrow. I'm going to be watching really close this retail sales data that comes out tomorrow, because retail sales, here's the thing. We're seeing a slowdown in the labor market. We're seeing some slowdown moderately in inflation. But the question is the consumer going to stay strong, or are they going to wash up too? That's the question, because if the retail sales number comes in tomorrow week, I really think that could cause the stock market to have a little bit of a blip lower. Because if you start to see retail sales, you start to see the consumer crack a little bit more. If that happens, the stock market may pull back for a little bit. That would be my thought. So tomorrow's retail sales numbers are going to be really important. This morning's number, it's important. It does have some merit to the market, but I think your retail sales number is the big one this week. And then we have a bunch of PMIs on Friday, which will also be important to the market. So claims will also, of course, be important as always. So we've got a pretty busy week and should be big. Also, really quick, guys, I'm going to just drop something here in the chat. Give me a moment to pull up this link here. I'm going to drop the link to our Discord channel. If you're not already in our Discord, we're going to be doing some cool announcements today. So do not miss out on this. We are going to be giving out some cool stuff. We're going to be making some cool announcements inside of our Discord channel. If you're watching on Twitter, give me a second. I'm gonna comment something on Twitter, but it's gonna take me a second to get there. I'm running the stream solo here this morning, so I'm getting there. Okay, we got 80 viewers on Twitter. Good morning to my Twitter friends. Okay, I'm just gonna drop something there. Okay. All right, there we go. If you're watching on Twitter, I just left a comment below the live stream for you. The Discord channel can be found within that comment. So, oh no, it can't. Hold on. I'm going to drop one more comment. Discord, there we go. Okay, Discord link is below the live stream on Twitter. And if you're watching here with us live, the Discord link has been dropped in the chat. Make sure to join that here today. It's going to be an interesting announcement, so stay tuned on that. We're really excited about that. It's going to be a big week, big trading week here for us. Let's have a look and see how things are reacting. The S&P is slightly down on the day. NASDAQ's flat. Dow is just down slightly. Russell's down a little bit. Gold is down 0.65%. Silver's down 1%. Oil is up on the day here. And yields creeping a little higher. Not so hot for my TLT position, which I am long TLT. But if we do come back to retest this level of support, I'm fine with that as long as we continue to hold support. That would be ideal, obviously, for my TLT position. Bitcoin's down 1.6 here percent here this morning, breaking through this level of support. Bitcoin, in my view, may look like it has a little bit more downside in the short term. Could be interesting to watch. Take a look at the euro, broke through support. Now looks like it may find resistance. It already kind of did here. It was messy, but it retested and dropped from there. The pound is sitting at support. We'll see how this one reacts. I don't think I have a setup on this one right now. Gold is getting a bullish reading still. The TLT position is backed by this 10-year treasury bond, which has been a really positive score in the EDGEFINDER recently. Dollar Swiss, how is USD CHF doing? I'm still short on this one. It's come back a little bit against me. So I shorted Dollar Swiss last week within the VIP room. And again, basically the idea, I'll pull that up for you really quick. Give me a second. So let's do, whoops. I'm going to switch open to my trades. I'm going to go to FX. There we go. Okay. So USD CHF is a trade that I am in. I haven't taken an FX trade in a minute, so this is my first one in a while. But I like the setup a lot on USD CHF. This is the dollar against the Swiss franc. And basically, again, broke, retested, hit this level on the 38.2% retracement. I basically got in short with a stop loss above that level and started out well. We'll see. It's bouncing a little bit here today, and we'll keep an eye on that. But I'm looking for more downside. The idea behind this is kind of a little bit of a risk off play, basically. But I'm still somewhat bearish the dollar, thinking that, again, slowing inflation data and jobs slowing, both of those scenarios kind of not ideal for the dollar in the short term, in my view. Resistance was hit. And again, that Swiss franc may offer a little bit of a safe haven effect should we continue to see just a little bit of concern come into the markets again. Was the concern based on? Well, maybe the idea that rate cuts aren't coming so quickly. That might strengthen the dollar, but it also might strengthen the Swiss franc more, just off of the idea that markets may have a little bit of a hiccup going forward. That's also why I'm long gold, right? So I'm sort of oriented towards risk off, which is somewhat contrarian to this market right now. I mean, if you take a look at the NASDAQ, that doesn't look very risk off right now. And so I'm not shorting the NASDAQ, but I am thinking, and this is my take right now, is that going forward, let's say 1 month from now, and again, I could be wrong on this, but this is my thesis. 1 month from now, do I want to be holding the NASDAQ between now and then, or do I want to hold gold between now and then? And for me right now, the answer is gold, because I think gold, relative to the NASDAQ, from just strictly a price action perspective, I think is a better pullback setup currently. But also, I think that the NASDAQ is starting to get a little stretched here. I think that you are starting to see some overbought readings coming into this. And that does not mean that I start shorting the NASDAQ, but it may mean that I'm a little bit more cash heavy. It may mean that I'm trading commodities more. It may mean that I'm selling covered calls, which I have chosen to do against my my indices positions. I am long as of, the April lows. I have been holding some trades on those for some time. I'll show you that. In fact, give me a second. So I am long the S&P 500. I have 400 shares of VOO and 1,000 shares of XLK. But I've sold calls against my position, which I was a little early in doing so. But that's kind of where I'm at. I think that the stock market, it's not that I think the stock market doesn't have upside. It's that I think that in the short term, it's a little bit stretched. I think it's a little due for a normal corrective pullback. And I will be looking to kind of just wait on the sidelines for that. I'm still bullish overall on things like the NASDAQ. If you get pullbacks to these levels, I'm probably a buyer. I like both those levels for continuing to stay bullish. But at current levels, it's hard for me to justify really buying anything. Same thing with the S&P 500. If you're looking at this, 53.25 looks a lot better. 52.50 looks a lot better for possibly a bounce trade. But as it stands, I'm just not really seeing the good risk to reward setups buying the NASDAQ and S&P right at the highs. So I'm just waiting for pullbacks if I can get them. Dow Jones, again, this one looks really rough compared to the others. And, if you're wondering, why is the Dow Jones performing so poorly in relation to its peers, the NASDAQ and the S&P 500? Well, it's because if you take a look at some of the sectors that, are, well, even some individual stocks, but technology is doing amazing, right? The semiconductors, this is like AMD and NVIDIA and Qualcomm, and those types of companies are doing really well. Technology companies and software companies are even bouncing back. Those areas of the market are doing well. But what's not doing so well is, the rest of the market. It's very thin leadership right now. And when I say leadership, I'm talking about companies performing well. It's really technology and then everything else. So if you take a look at, XLC looks good. This is the comm services, Verizon, AT&T's. Those have bounced well. Google right in there. But then if you take a look at staples, they're not quite near at the highs. Take a look at financials. They've kind of gone sideways. Take a look at real estate. Real estate's been flat for a long time. Industrials not doing so well. Utilities not doing so well. Energy doing terribly, right? XLV, this is healthcare, sideways. So you can see that the stock market, as the stock market just rips through the highs, it does make me a little concerned that you see, while that's going on, in the NASDAQ, you see all the other areas performing more like this, right? So that divergence makes me a little bit cautious on the stock market. Again, it doesn't mean I'm bearish on the stock market. It just means that I'm not touching it, buying it up here. I went long in this April pullback. That ended up being one of my better trades this year. That and the gold trade that I took in the first few months of the year, first quarter, those are my biggest trades this year for sure. But I've capped my upside. I've sold calls against my positions, and I'm fine with that because I think that we may see some pullbacks going forward. It's only ripping because of the tech industry. Exactly right. Which is, fine. I mean, technology is a really strong play right now. But when you don't see, participation from other areas of the market, it's a little bit concerning. I'll show you another chart. Is it RSP? RSP. So look at this. Here's RSP. This is the equal weighted S&P 500. That basically says that if you took all of the S&P 500's companies and just put equal amounts of money into all of them, that's what this ETF does. And what you can see is that the ETF that equal weights out the S&P 500 is not doing very hot. But then you take a look at the same chart, the S&P 500, which does weight, and it weights towards the biggest companies. You can see that the biggest companies like Nvidia, Microsoft, Apple are carrying the entire weight of the market because, again, equal weight is flat, but market cap weighting is performing very, very well. So the divergence there is a little bit concerning for me. And I heard recently on CNBC that the RSP and the S&P 500 they're at like their greatest divergence in, I don't know, some long period of time. It has not been this diverged in some time. So that's a little bit concerning to me. I think that will correct over time. And whether that means that the equal weighted S&P 500 catches up, meaning, other areas of the market start to really participate, or heavy, large cap stocks are top heavy and they start to pull back. One of those two scenarios is going to happen. I don't know which one. I think I kind of lean towards the top, the heaviest companies pulling back here a little bit. I think that you do see like Nvidia's and Apple's pull back at some point. And so we'll keep an eye on that. Anyways, that's a lot of stock stuff. Let's keep an eye on what is happening this morning with the dollar index. The dollar index creeping higher here this morning, breaking through resistance. We'll see if that does get a pullback, if that kind of continues. My thought process in the dollar is short term, it does continue to look strong. Perhaps the commentary from Jerome Powell last week was taken a little bit hawkish. We saw that in some of the other sectors. As I mentioned, like real estate really sold off on that. So, yeah, should be interesting. Guys, I mentioned this earlier, but we are going to be trading inside of the Discord this week, and we're going to be doing some really cool announcements later today. So if you are not already in the Discord channel, I'm going to drop the link one more time. If you're watching on Twitter, it's one of the comments below the live stream that you're watching on Twitter. So join this link if you have not already. It is free to join our Discord channel. There's a great amount of free value there. And we are also going to be announcing some really special stuff today inside of the Discord channel. So stay tuned for that. It is going to be very, very exciting. So again, join the link. I'm keeping it a secret for now, but stay tuned and we will have some really cool announcements for everyone in our Discord channel today, both free and paid. So stay tuned on that. Dollar index depends on the exchange rate of the US dollar itself. Yes, relative to its peers, right? So it's like, what's the euro looking like and what's the pound looking like? And that's how the dollar index is calculated. It considers the other ones. Dollar yen continues to trend higher here. Really strong chart for USD JPY. It looks like it might be wanting to break through these highs. We'll keep an eye on this one. But again, resistance up here at 1. We've played this game so many times at this point. The question is, are we just going to, is it the same strategy on this, which has been, the strategy has been for the dollar yen, big sell-offs are buying opportunities, and then big breakouts are also buying opportunities. It's been hard to, if you've been bullish on the dollar against the Japanese yen, it's been kind of a hard one to mess up because this thing has just been going straight up since 2021. I mean, it's had its pullbacks in there, but for the most part, this thing has just trended higher. That doesn't mean that it's going to trend higher forever, but the story continues to look really strong for the dollar in relation to the Japanese yen. Yeah, the Bank of Japan is just struggling to really get grips over their currency, keeping the strength of their currency intact. And uh, you know, they're facing a riddle of problems, a list of problems that we've talked about on the stream a lot, like aging population and you know, some of the and population decline as well. I think Japan is experiencing that. So remember that population growth is really, what causes GDPs to grow is population growth, right? If they're that and innovation and technology, a combination of the two for sure are the big drivers of GDP growth. But if you don't have population growth, it does hurt the story for, business outputs to grow. Because if you have more and more people flowing into an economy, that economy is just going to get moving more and more. And that movement is what makes an economy strong. So the lack of movement has continued to make the yen very weak in relation to its peers, and something to think about. Aussie yen getting a bullish reading and Swiss yen getting a bullish reading. Let's go look at AUD JPY. Not really a currency pair I'll trade very often, but the chart looks pretty good. Continues to trend higher. CHF JPY. Look at that, Swiss yen really going strong. I like the Swiss franc to the long side. I've stayed bullish on that one for a minute now with my dollar Swiss shorts. But yeah, I like the upside for Swiss yen as well. If that one pulls back, that's a nice trending chart. Maybe a pullback is probably a 50% retracement. Let's see, 50, almost around a 50% retracement. So, pullbacks, if they happen, could be interesting for this chart. How do you trade currency pairs that have a strong opposite bias in the Commitment of Traders weekly report? Ava, when it comes to the Commitment of Traders report, which we should pull up just to talk about, the Commitment of Traders data is a powerful tool that I use often in the videos and in my trading. But it's not the only thing that I look at, right? The Commitment of Traders data is a bit lagging to a degree. Well, it is lagging. By the time we get it on Friday, it's Tuesday's data that comes out on Friday. So it's not very great for like scalping or for, immediately trading. But knowing, generally speaking, the direction of money flow is a really powerful indicator. That's why we use it. So what I like to see on this is that, look at gold. Gold continues to be the number one proportionally longed position from the non-commercial positioning. That's really bullish for gold. That has been part of my thesis for why I've been bullish gold in the last, big money is long gold. That's a good sign. It doesn't mean that big money is always right. In fact, big money is sometimes wrong. But you have to understand that what's really important to traders is this section down here, because this section will show you on a week over week basis what's been happening in terms of, kind of the change, right? So if you're looking at, US 30, you can see, for example, that they decreased the number of long contracts that they own. And I'm saying they as a placeholder for non-commercial COT positioning, right? So this is big money, hedge funds, mutual funds. They manage a bunch of money. They increased their shorts. So they increased shorts and they decreased longs. That's a really bearish week for the Dow Jones. So that is something to pay attention to. So we look into that. And what else we do is we can do all that manually. But this is just one piece of information. It does sometimes bug me, I'll admit, when people will watch the live streams or videos, they'll want COT data to show up on the screen. And then they're like, okay, that's good. I've got all I need to now trade. And the answer is the reality is that that's not a great way to trade, in my opinion. The COT data is like one puzzle piece. Imagine trying to know what the whole puzzle is based on just one single puzzle piece. That's what trading only with COT data does, in my opinion. You're missing something, because it is a little bit lagging data, and it also can be wrong sometimes, and it's not it's kind of an aggregate overall. So it is useful, but it's a puzzle piece. It's not the entire puzzle. So then we take that into consideration, but you can see it's one column of many columns that we find to be very, very important to an asset or symbol's scoring. When we look at gold right now, gold is getting a bullish reading because when we calculate all the tabs up, we get a nice bullish reading. But it is possible for something to get a 0 on the COT report, meaning it's not really showing a bias when we look at these currencies, but still get a very bearish reading because of the other factors, right? Don't let one, again, a very, very beginner mistake that a lot of people make is they think they found one holy grail indicator like the commitment of traders data. And they're like, look, I've got the secret. But the real power that I've found over the years is that, the COT data, that's great, but don't forget all the other great, powerful indicators that you can use to your advantage. Why just ignore the rest? Why only put your emphasis on one, which can be wrong, and rather combine many together to kind of get a full picture, right? Let's put the full puzzle together to determine what we're looking at, not just one singular piece. Does that make sense? Hopefully it does. If you guys would like to try out the EDGEFINDER, I'm going to drop a link here in just a second. Let's see. Well, I gotta hold on. I'm going to drop the trial link if you guys would like to try out the EDGEFINDER for 30 days. I'm going to be dropping the link to that here in the chat. Okay, so this link that I just dropped here, this is the EDGEFINDER 30-day trial link. If you would like some information, apply right there with that link, and someone from our team will reach out to you with information on how you can try it for 30 days. It is very powerful to use tools like this. I'm obviously we sell this tool, but we built this tool for the intention of our own trading primarily. When I first dreamed up the EDGEFINDER, I didn't even think I was ever going to make it public or even talk about it or sell it. And I genuinely mean that. When I created it, I didn't think anybody would want to buy something like this. We were very pleasantly surprised to find out that traders do want to use market data. They do want to add layers of fundamental analysis to their trading, so they're not just staring at charts all day. I could never go back. I absolutely simply could never go back to trading simply looking at charts and then just trying to read articles. After doing this, after using the EDGEFINDER for a few years, never again will I try and understand fundamentals without it, because it's just, you can do it, but I used to do it, but you have to read articles, watch things all day long. And it's like a full-time job just to keep up with the economic data. Whereas software can simplify it. And even when I was on vacation last week or 2 weeks ago, when I was in, Ireland, I could just check in on the EDGEFINDER, and it was amazing. It was like I could check in the EDGEFINDER, see what the scores were, and without even knowing what the news headlines were, I still had a pretty good picture of where I wanted to be in the markets, which was amazing. Because I'm staring at this stuff all the time, but when I was on vacation, I was not, and I was still able to check in, do my trading for less than 30 minutes, get all the bias that I want from the EDGEFINDER or from the charts, and move on. And that was amazing. It was really, really cool, just from a perspective of having worked on this tool for so long, to just really feel it in action with a busy schedule. I was doing all the wedding stuff with my sister-in-law, and I was able to just tune into the EDGEFINDER and get what I needed done. It was amazing. It was really, really a cool test for me. Because, we're always, neck deep in this stuff, trying to improve it and work on it and watch the markets. But when I'm in the office, but when I'm not in the office, it was a cool test to just feel what it feels like to be an EDGEFINDER user. And it was really cool. So let's see what else is moving. Gold pulling back here this morning a little bit. Also, I need to double check. Just going to check the live stream schedule. I don't know if let's see, today is June 17th. I think we have, wow, do we really have a lineup today? All right. I think we're going to hang around then, guys, because we've got Kenzo coming on at 9:15, supposedly. I thought we were going to have Ivan. Ivan was supposed to come on, I think. But no Ivan today, I guess. We miss him. Anyways, big movers for the market this week. are going to be probably tomorrow's retail sales data, Thursday's unemployment claims, and Friday's PMI data. Those are probably the bigger events that I can see. Have you noticed Americans migrating from FX to futures? Yes, a lot of that. A lot of that going on. We've really seen a big shift. I mean, FX in the US has already been, greatly limited. There are some really great US regulated brokerages. If you really want to trade FX, that is totally something that you can do. Down below in the description, if you want to check out OANDA. OANDA is the FX broker that I highly recommend for US traders. It's a great brokerage. I know a lot of people there. They're awesome. I don't really trade futures myself. I trade ETFs and stocks and options. But you still have the choice to make as a US trader. You can still trade FX if you want. You can trade options. You can trade ETFs. You can trade futures. You still have many ways to play around in the markets if you want. Look at the Russell, guys. Look at this. Russell is making a low here this morning. This is the Russell 2000, which shot up huge on the CPI report this past week. Came out better than anticipated and has drifted lower since. And now putting in fresh lows, the Russell is, of course, another variable here in this stock market divergence that I've been talking about, which is the biggest of the big companies are taking the lion's share of the gains in the market. Your NVIDIAs and your Microsofts, et cetera, are really enjoying that status of having all the capital, having all the investment coming to them. Meanwhile, you have a lot of other companies that are not in the tech world getting really crushed. And small caps also not loving the idea that rate cuts may be getting pushed back. I mean, if you take a look at the Fed Watch tool, let's take a look at this really quick, just to see. We are looking at September. September is like just about a 60% chance of a rate cut, but there is the possibility that you don't see a rate cut and that the first rate cut could come in November. And there is the possibility that you don't see a rate cut at all this year. I think it's unlikely. I think you're probably going to see a rate cut this year. But again, the market started out this year thinking, 3 from the Fed, but the market itself actually was, a lot of people were expecting like 6 rate cuts this year. We're now debating whether we're going to have 1 or maybe 2. It's a very different environment. And that's why, guys, look at this. This is crazy. Imagine if you had parked all of your investing, if you had bought and held the Russell 2000, which over the long term has been a great investment. If you bought the Russell and held it over the long term, I mean, you're doing fantastic. But not recently. I mean, if you had in 2022, you said, okay, I'm just going to park money in the Russell and I'm going to wait. You have waited for over 2 years and gotten a negative return or a 0% return. Inflation adjusted, that's a negative return, right? So it's crazy. The Russell has really struggled. And I think for good reason. I think that rate cuts are still going to happen, but they're definitely not, they're proving to not be as easy or as rapid as people were looking for or hoping for. And that is, again, kind of the struggle for the Russell. Now you might say, well, is that also a struggle for gold? Because gold also is all about rate cuts, right? And it is for sure a huge component to the gold story. But what is also a component to the story here, and this is where I diverge between, why do I really like gold, but I really don't like the Russell? Well, here's why. Inflation, let's say inflation, and we're going to say the economy, okay? These are our 2 variables. And we're going to say gold, and we're going to say Russell. We're going to say gold, and we're going to say Russell. Okay. So if inflation is sticky, well, let's do the economy first. This one's the easier one. So if the economy is slowing down, that's actually pretty bullish for gold, because people are going to say, okay, this is getting a little rocky. The economy's starting to slow down. I want to put money in something else. Maybe gold is an alternative alternative asset, right? An alternative investment. So there's that story. But not good for the Russell. Let's make this red, because the economy slowing down is going to really hurt growth for small companies. Remember, the Russell is like a proxy for smaller publicly traded companies. Okay, so think through this with me though. The economy is slowing down. Gold gets a little bit of a risk off bid, and the Russell gets sold. And inflation remaining high, let's say so the economy is deteriorating, and let's say inflation is staying high. If this is our scenario, right? And this is all, by the way, what I'm showing you here is all automated in the EDGEFINDER. The EDGEFINDER takes all of what I'm saying and calculates it automatically. That's why I love the tool so much, because it does all of this thinking for me. All of the variables that we take into account automatically get calculated bullish and bearish based on the logic that I'm going through with you right now. So I love that component about the EDGEFINDER. We'll come back to that in a second. Inflation, right? If inflation is high, you might say, well, inflation high means they're not going to cut rates, so that's bad for gold, right? Yes and no. I would say it's actually kind of neutral if you take into account this. If growth is declining while inflation is high, this is not necessarily bad, because the Fed may not keep interest rates high if the economy is sliding. If unemployment starts rising, here's your story. If unemployment starts rising, they may still cut rates, but it's not going to be rate cuts for the right reasons. It's not going to be cheered by the market. In fact, the Russell will hate this. The Russell will not like that at all. Because again, if you're getting a spike in unemployment data, that's why, when I see high inflation data, I like, generally speaking, being long gold, especially if the economy looks wobbly. There's a caveat here. There's something you need to really understand. If you're going to be a gold trader using fundamentals, listen to me very carefully here. If the economy is strong, it deteriorates the story for gold, because in a strong economy, if you have high inflation, they can just raise rates, and it will really be terrible for gold, right, in that environment. But if you have the economy struggling, which I wouldn't say it's struggling yet, but it's showing signs of cracking, showing some signs of slowing down. If you get a slowdown in the economy plus inflation that doesn't want to go away, which I think we continue to see right now, that is a bullish environment for gold. What is this called? Does anybody know what the environment that I'm describing is called? Someone in the chat, let us know if you have the answer. What is this environment called? Which is historically a pretty bullish environment for gold specifically. Does anybody know the answer when you have slowing growth but stubborn inflation? Often it's rare because it doesn't happen that often, because usually growth comes down with inflation. Yes, we have the answer in the chat. Stagflation. And yes, it can turn into a recession. It can turn into a nasty recession. So yeah, the story here is kind of that's a bullish story for gold if you get this scenario. It's not guaranteed that we do get that scenario, but it's what I think might be forming. It's why I'm not super bullish on the Russell, but I am bullish on gold, even though both are very sensitive to interest rates. If that was helpful to you, can you do me a quick favor and just thumbs up the stream right now? If you could do that, that would really help me out, just to let me know. I do oftentimes check out the like button after to see how much people resonated with the points that I was making, because I know we're not going into a million charts right now. It's a little bit more kind of walking you through something here this morning. But if that was helpful to you, make sure to hit the thumbs up button on the stream. I do greatly appreciate it. And S&P not making too much of a move here this morning. NASDAQ, Dow Jones continues to trickle lower. Russell continues lower. The FTSE down. The DAX down slightly. There's the Nikkei. The VIX is up. Dollar index was up. It's given back some gains. Gold is not really moving that much since this morning. You can see we had some overnight sell-off, but now we've just been range bound. Again, I think a big report this week for gold will be retail sales. So I wanted to touch on something too. All of that to say that all of that, breakdown, if that was confusing to you, or you would like to do what I do, which is automate all of that, check out the EDGEFINDER, because this is the utility of the tool. This is why it's our top selling product. This is why so many traders are using the EDGEFINDER. It's because that that information. I just dropped a link here for the 30-day trial. That information. Oh, let me try just dropping the link because I think that might have messed up the link when I did that. That scenario where you're looking at economic data and you're looking at inflation and you're trying to pick out what scenario you're in. It's a game changer for trading, because if you are understanding the environment that you're in appropriately, the setups can be really, really strong. Because if you're in a potentially, if we were to see things trend towards stagflation, which I don't think we're there, I'm just saying if we continue to see the probabilities for that line up, again, for me, that means I got to be looking for long setups on gold, right? If that unwinds, maybe I need to be bearish gold or out of the way of gold or something like that, right? Something to think about is, which environment are you in? How do you spot which environment you're in? You look at the data and you score it with a systematic approach like the EDGEFINDER. That is literally why we're in business. That's why my company, why people use our tools, is because we help automate the fundamental side that a lot of traders want to use but feel like they're too hard to understand. Fundamentals don't have to be incredibly hard. As long as you can learn how to read what you're looking at, this top setups page, if you learn how to read this top setups page, you can get the gist of it and then use technical analysis in combination with it to really, improve your insights in the market. That is really the purpose of the tool. So again, check out the trial. If you'd like information, you can apply there. And yeah. So I think we're supposed to have another guest come on the show soon. Let's see. Is Kenzo coming on today? I think he's got to be coming on at 9:15. So that is supposed to be in 5 minutes. Let's see. If you guys have charts that you would like me to pull up, I'm happy to do them. Just drop them in the chat while we wait for a potential next guest. And I'm happy to take a look at that. Bitcoin again, look at that Bitcoin selling off. If you're somebody who is really bullish on Bitcoin, here's something for you to think about. Bitcoin, I think, I'm not a long-term hater of Bitcoin. I actually think that, if you get another sell-off in Bitcoin, I think that the risk reward is incredible on Bitcoin. Like, because your invested capital might go to zero. It could totally happen that it goes completely to zero. Or the alternative, it goes way higher over the next decade. This is what I've always said about Bitcoin that I really appreciate about it, is that if you buy Bitcoin at this level, let's say 58,000 or whatever, and let's say you bought one coin, which is a lot, 58,000. Like if you bought one Bitcoin, you may either lose 58,000 or you might make 500,000. And I like the risk reward to that, but I don't claim to know what the future of crypto is. I think it could go very much either way. But longer term, do I have huge belief in it? Not particularly. But do I want to own some for that good risk reward scenario over the long term? I think I do. So I'm looking for opportunities to maybe add a little bit of Bitcoin to my portfolio for the longer term, but I'm not in a real big rush to do so. A huge bullish catalyst would be a break through these highs from a momentum trade perspective, but from just a longer term, like have a position in it, for me, I'd like to see if I can get a pullback, and I might add at some point to build a little Bitcoin position. but of no huge size, very small speculative position. And you have to accept that is what it is. It is very speculative, very much an uncertain investment, because all of your capital could go to zero if you're holding cryptocurrency. And that is something that things like that happen in the past, right? Everybody gets incredibly bullish on something and it goes to zero. It has happened. It can happen again. Even when it doesn't seem possible, it totally can. The NASDAQ. Yeah, let's look at the NASDAQ. So we have a request for the NAS 100. From the daily charts perspective, really simple here. I've said this earlier. I am bullish on the NASDAQ, but only if we get a pullback. Like there's really nothing for me up here. I can't buy it and I'm not going to short it. So nothing for me up here on the NASDAQ. Take a look at the 4-hour chart. Still maybe pullbacks here, but that's just too shallow for me. Like I need a a normal, get some of the buyers out of the way, flush to the downside. And that would probably take me back to that same level on the daily. The 1-hour chart, not a lot of momentum here or even volatility. So I'd wait for something to form. If you are a 1-hour chart trader, you might be able to look for like breaks, retests one way or the other. But not really anything for me here on the NASDAQ. I am bullish overall, but very much on the sidelines waiting. Euro yen. Let's see. Yeah, we can do euro yen. Euro yen. No fundamental bias for me on euro yen. However, from a chart perspective, daily looks really strong. You're trending higher very nicely overall. It looks like it just tagged support. You could have a couple different scenarios play out here. This level of support seems pretty strong. So if you get a retest into that zone, I kind of like that. Not a trade for me because, again, like I said, it doesn't have any confirmation on the EDGEFINDER. I don't really take trades unless I have a fundamental reason as well to do so. If you are looking at it technically, again, support around this area. If you break out, support around this area, but it's in an uptrend on the daily chart. I really like that chart. It looks really clean. Just don't love the fundamentals. I don't have a strong enough conviction, I should say. Let's see what else. EDGEFINDER data for pound Aussie, just going to be neutral for you. Nothing particularly strong there. If we add in the neutrals, you can see a lot of stuff gets, and this is, again, another resource that the EDGEFINDER offers is like, if you see something just in the neutral camp, I just completely ignore it because it's just not, I don't have a strong enough reason to enter a position. I may hold a trade longer if it goes into neutral while I'm holding it. Like let's say I'm long right now and it goes into neutral. I may still hold it if the price action's okay. It's mostly about when I take entry signals that I use the EDGEFINDER. Do you pay much attention to the holding costs? I trade ETFs, and the only thing I pay is expense ratios on ETFs, which are very, very low over the course of a year. So I really don't pay too much attention. If you're trading FX, you have swaps, which can get very costly. But so I do pay attention to it if I'm trading FX. But for ETFs, like my GLD position, etc., overnight costs are kind of not really that much of a thing, which is really nice. In fact, some things will even pay you a dividend. Like TLT, my bond position, has paid me one time already. I think I'm due to get another dividend at some point here. A dividend of 30 cents per share, which doesn't sound like a lot, but I have 1,000 shares of TLT. So 1,000 times 0.3, right, is $300. So I got paid a $300 payment for holding TLT long. So the cool thing is that with ETF trading, oftentimes I'll actually collect a dividend on certain charts that I'm trading, which I love, which is amazing. What is this app? This is the EDGEFINDER. We dropped the link earlier. We can drop it one more time if you guys would like to try it for 30 days. Check that out. And you can try it out there. Again, you apply using this link, and then we will reach out to you with information on trying it out there. So there you go. Cool. Okay, let's see. Been going for 1 hour. I think I've been trying to figure this out. I think we just had Chandler join here. So I'm looking at the live stream schedule, and it says we've got a show lined up today. So I've been holding out, but I have not seen Ivan, and I've not yet seen Kinza. So we're waiting to see. But if you have any updates, Chandler or James, I don't think James is in here yet, but just let me know. USD CHF, let's check back on the position. Okay, very nice. Again, I'm short on dollar Swiss. We'll keep tabs on that. Curious, I want to keep an eye on gold as well. Gold is a trade that I have a pretty good size in gold right now. In fact, it's like max position for me. But please understand, when I say max position, I'm still not risking like my entire life on gold. I'm still risking relatively small, but I really like the story for gold. I think that I just have, and this is the crazy thing about trading. So please understand this. I believe right now with my strategy, with the fundamental analysis that I've done, with the tools that we use on this stream, I think I have a very good case for a bullish scenario for gold going forward. But here's the what do you call that? The asterisk, right? The asterisk, the warning with that is that it doesn't matter how strongly convicted you feel about a setup. There is always the potential that the market changes, that something really drastically changes in the wind, and my whole thesis could be thrown out the window from the highest level of a skyscraper. Okay, that's how violent the market can be and how it is an unpredictable thing. You can't predict the market all the time. There are simply too many variables. If you think that the market trades on some sort of perfect, predictable system, you're just a fool. There's too many variables in the market. How can you know if somewhere in the Middle East, something terrible is going to happen and change the whole story for the market for the next 3 weeks? You can't know that ahead of time. To believe that you have some sort of perfect ability to predict the markets, or even close to perfect, is a fool's thought process. You have to be more humble than that. The markets are more difficult than that to predict. There are things that we simply cannot forecast added into the picture here. If you're doing mathematics on a whiteboard, mathematics are just a rule set. There's a simple truth and a right answer that you can come to. The markets are not like mathematics in that regard. The markets, you might have all your variables in front of you laid out like you would with a math problem. But the difference when the market is, it's like you can be doing the math problem and then something else can get thrown into the math problem mid solving the equation. Does that make sense? I don't know if that's a good analogy or a terrible one, but my point is that the market conditions can drastically change and you cannot forecast when they are going to change. That doesn't mean that you can never have good trades or forecast what's going to happen. But you have to understand everything is probabilities, not certainties. Anybody who you watch on social media that tells you anything other than that is lying to you and trying to sell you something nonsensical. There's too many variables. How can you possibly know what the market is always going to do next with precision? You can't. People who sell you otherwise are blowing smoke, okay? There's just too many variables. So should you just give up? No, you should just understand. That's why you keep positions small. That's why you understand that variables can change and that you need to be flexible and adaptive in the markets, and understand that you're never going to be certain about any position. You should never be 100% certain about any trade you take. You should instead, it's like the Warren Buffett concept is like, you should never jump into a river with both feet. You should dip your feet into the river, right? That's his idea when he talks about like stocks and companies that he's buying for the long term. And, that's like the old expression is like, don't jump into the river with both feet. What if the river has, What if it's 50 feet deep and you just jumped into some, you see what I'm saying? We're full of analogies today. I'm sorry for all the analogies this morning. That's my favorite sound effect. I also like this one a lot. The John Cena sound. Okay, I don't know. James and Chandler, help me out with this. We've got on the stream schedule here, we've got a lineup here, but I haven't seen anybody join the stream just yet. So if we have anybody else, let me know. But if we don't, then I'm going to probably close up the stream. 90s sitcom groove. Yeah. It totally is. Okay, so gold is slightly bouncing here this morning. Let's take a look at TLT. TLT not doing so hot this morning. Don't do it, TLT. Come back. TLT is a position that I've held for some time. It was looking beautiful last week. I mean, I'm still in profit. I think my entry is right around this area here. But pulling back, we'll see where that one wants to go. I think TLT has more upside. I'll just say it. We'll see if I'm right or wrong. But I like TLT and I like gold still. Okay, all good. Thank you, James, for the update. I'm going to go ahead and close down the stream here, guys. Before I do that, I mentioned this earlier, but we're going to drop the link here to join our Discord channel. If you have not already joined our Discord channel today, you're going to want to do that. We're going to be announcing some really cool stuff in the Discord channel today. So if you have not already joined the Discord channel, it is free to do so. We're going to drop the link here in the chat. If you're watching on Twitter, there should be a link that was commented. I put a comment down below. So make sure to join the Discord channel if you have not already. That will be coming out in just a little bit. So stay tuned on that. And with that said, guys, thank you very much for tuning into the live stream, and stay tuned for that announcement shortly. Thank you, guys. We'll see you back tomorrow.
Thanks for tuning in to today's A1 Trading Show. Make sure to subscribe and to turn on post notifications so you don't miss the next one. Also, we're looking for more guests to come on the show. If you're comfortable being on camera, have trading experience, and you're looking to grow your audience exposure, we'd love to have you on. In the live stream chat and description below, we'll drop a link to apply to be a live stream guest and join in on the conversation. We hope to have you on soon. That's all for today. Trade safe, and we'll see you next time.